Hello, folks. It is Sunday, March 26. It is about 1:30 on the East Coast of the United States. Let's jump right in. We've got a lot to cover today. One of the benefits of doing a free video is that you get to talk about whatever you want to talk about. And so today I want to start by talking about cycles. And of course, we got all kinds of cycles in our world and in the universe. Short-term, long-term, business, economy, human development. They talked about it in the Bible, to everything there is a season, time for every purpose, so on and so forth. That's in Ecclesiastes. And then, of course, the Birds did a song about the same idea. The cycle that I want to talk about, this is, energetic cycle is how I would describe it. So we have moved from the age of Pisces into the age of Aquarius, and before, don't go away yet. It's you probably think that I finally flipped. I was flipped already, but you might not have realized that yet. So anyway, we've been living in the age of Pisces, and from an energetic perspective, Pisces is about schooling. They're fish; they school together, and of course, when the energy, the background energy in the universe and in our solar system is Pisces, the schooling energy, it's easy for people with power to come in. They set up their hierarchical organizations and they control the schools of fish. And so that's what we've been living in up until just recently. What we have transitioned in, and some people believe that we're still in the transition period. I'm going with this the vernal equinox in 2021 as the transition point. Some people put it later than that. Anyway, Age of Aquarius is about the expanded consciousness. It's the age of the individual, where we collaborate with like-minded individuals. And so it's very different energy between these two ages. And so, I'm always looking for the big picture. And so when I back up and ask, okay, what's the bigger picture? What's going on right now in our world? One of the things that helps me understand that question or answer that question for myself is this transition from Pisces to Aquarius. The world, our entire solar system is going through a transition right now. Let's look at some pictures and I'll continue. So we have the plane of the galaxy. So the Milky Way galaxy, that's where we live. Welcome, if you didn't know that already, welcome to the Milky Way galaxy. And then you can see here, they're only showing the Earth, but, of course, our Earth is part of the solar system. So our entire solar system runs in cycles where it goes above the plane of the galactic and below the plane. And so we're currently moving through the plane, the central plane of the galaxy. And it's easy for me to understand that as we're in the central plane, that energies are elevated. There's more energy. It's a denser area of space, the vastness of space. But it's not a consistent vastness. There are concentrations of energies. And I believe that where we're at right now, relative to the galactic plane, we are in an elevated area of energy as we move through the plane. Now, ultimately, we will get back above the central plane of the galaxy. My understanding is the Earth, the solar system, it's about 200 million years. And so you want to talk about long-term cycles. We're talking about 200 million years. We've spent that time, I believe we were below the plane, and now we're moving up we'll be in the, you and I won't be up in the plane, but our progeny, our children and their children, they'll spend their lifetimes up here above the central plane of the galaxy. 200 million year cycle. And so while we're in the central plane, and I think it's about 2,000 years, 2,100 years that it's going to take us to move through all the way through the plane of the galaxy. Um, Accelerated energies, heightened energies. And when we look at world events, everything that's going on in the world right now, it's like, oh my God, everything has accelerated. It's moving faster and faster. It's like, well, that's the energy of space that we're in right now. And so, I'm hopefully not sounding too weird today, but again, free video, I get to talk about what I want to talk about. This is another way of looking at the same idea. So if we got this, this is the Milky Way galaxy, this is the path of the solar system. As we travel around the core of the galaxy, we oscillate above and below the central plane. And again, 200 million years above, 200 million years below. This image is too complicated. That's why I didn't start with it. But if you just go search on Google, you'll find, you can find these images, spend some time looking at them, and develop an understanding. Here's out on Wikipedia what they have to say about the age of Aquarius. Here it's, either the forthcoming or the current. I believe it's the current, that we've already entered into the age of Aquarius. And based on world events, I think that supports the idea that energies have changed. The world has changed. The solar system has changed because of our relative position within the galaxy. At least that's part of what's going on. 2,100 years in each age. So 2,100 years that we're going to spend in this age of Aquarius. And just kind of a tangential idea, the existing hierarchical organizations, the Davos crowd, the WEF, BIS, all these Western organizations, the UN, NATO, those are the control organizations, the hierarchical control organizations that have been established during the age of Pisces. They're all dying. They're crumbling, they're fading away. Unfortunately for us, that's a wonderful thing. It's a tremendous thing for human beings on planet Earth. Unfortunately, the people that head up those organizations and participate in those organizations, they're grifters, and their grift depends on continuing those organizations, continuing the systems that were established during the age of Pisces. And of course, those people aren't just going to pack up their tents and go away peacefully. They're going to do everything they can to hold human beings on planet Earth in the old ways of existence. They'll fail. It's just, that's the way of the world, or as Yoda would have said it. What did he say? That's the way of the Force. I believe that's what Yoda would say, is that's the way of the Force. So anyway, all of these organizations, Western organizations, will crumble and fade away, but it's not going to be pretty. The transition from here to there is likely to be ugly, and we're seeing some of that ugliness as we look about at world events. Banking crisis, obviously that's here and now. In my opinion, this image is everything we need to know and understand about the banking crisis. This is the world of money here on planet Earth today. That we've got gold as the foundation, we've got derivatives at the top. As we move up the pyramid, we're moving away from real things. Gold, that's a tangible asset. You can hold it in your hot little hands, you can look at it, it's pretty stuff. Stash it buried in your garden, it'll be the same in 1,000 years from now. When our progeny is up above the plane of galactic, the gold that you have passed down will still look the way it looks today. As we move up the pyramid, leverage increases. And that was a new insight for me in the past week, is not only do we move from tangible goods further and further into the realm of paper goods, but the width of the pyramid helps us understand the amount of leverage that is implemented within each of these asset classes. And of course, derivatives have the maximum level of leverage applied to them. And so anyway, if you're looking at, okay, there's a banking crisis going on, how am I going to handle that? Well, the further you move down this pyramid, the safer you are, with the ultimate safety lying down here in gold. Now, we'll return. There will be a day when it's appropriate to move our money back up the pyramid into investments that pay us better returns than gold does. But for now, in my opinion, the further we are down the pyramid, the better off we will be in the long term. My objective at this point is to preserve my existing wealth. And so gold does that, has proved throughout the ages that it does that. The first gold currencies were in 500 BC, about 560 BC, somewhere in there. It's about 2,600 years ago. And so gold has been used as a currency for at least 2,600 years. It's been revered for much longer than that. People talk about 5,000 years. Personally, I believe the history of human beings here on planet Earth is far older than what we were taught in school. But anyway, as far as the banking crisis, this image, everything you need to know, pick where you want to be on the pyramid. I suggest that gold is the place to be. Let's see. Nobody fully understands what's going on right now. I've listened to multiple videos this past week, read numerous articles. Wow, there's a lot going on. Multiple agendas. There's attacks, counterattacks. This was an interesting idea that Jerome Powell, the chairman of the Federal Reserve, and Janet Yellen, the head of the U.S. Treasury, they're not on the same team. Now, there's a wild idea. Powell is, and who knows what the truth is just an idea to explore, see if it rings true for you. Evidently, Jerome Powell is 8th generation American, deep American. Hopefully for you and I, he feels his American heritage and is trying to do what is best for us as Americans, the country of America. Janet Yellen, not so much. Many people believe that she and many of the people that we call leaders, I'm putting air quotes around leaders, have sold out to whether, central bankers, however you want to look at the powers that be, that most of the people who are currently in positions of control have sold out. They're selling America out from under us. And so anyway, that was an interesting idea, new idea to me, that we could have two people in the American economy, important position holders in the American economy, they're not on the same team. This is a resource I want to point you to, BitChute for one. So people can talk about topics on BitChute without being censored. On YouTube, clearly a censored platform. I got one strike on YouTube for a video, an interview I did with Bob Moriarty. I reached out to Bob just this past week and invited him for another interview. And actually the topic that I wanted to talk about, he convinced me that it's not a topic that's appropriate, certainly for YouTube and maybe not for any platform at this point. It's basically who controls the central banking system and what are their objectives. And so anyway, Bob didn't want to talk about that topic on video, and I can't say I blame him based on my understanding of what that is. And so anyway, If you're not familiar with BitChute, now you are. They don't have the level of censorship that occurs on YouTube. And I want to point you specifically at this channel. It's the Duran, and it's the two individuals that run the Duran, produce videos on the Duran. It is Alexander Mercouris, if I'm pronouncing that correctly. This is Alexander, and then Alex Cristoforo. And each of them have their own channels on BitChute. And so you can search for Alexander Mercouris. I believe that his name is, it should be down here in the description of the video. And then there's Alex, his name. They each have their own channel. On the Duran, you will find them doing videos together. This video in particular, they had Tom Luongo, if I'm pronouncing that correctly, and they talked about the Fed and the ECB. And so that is an excellent video if you're trying to understand the details of what is going on in the current banking crisis. I would recommend that video. There's a lot to unpack there. Tom is very well informed about the topic, the Fed and what's going on in the economy. Alexander, I like to think that I'm an intelligent, well-educated human being. When I listen to Alexander, I feel like a piker. He makes me feel somewhat dumb. He has an encyclopedic knowledge of the last several hundred years of history here on planet Earth. I mean, just amazing individual to listen to. He very, very wide range of topics that he speaks to and speaks very intelligently to. So anyway, highly recommend that as a resource. Let's see, let's move on. Inflation. So two ways to think about inflation. So, it's an increase in the cost of living. That's one way of thinking about it. Lately, I've been thinking about it as the loss of purchasing power. And of course, the BLS, the Bureau of Lying Statistics, they want us to believe that inflation currently is, I don't know, I think 7% is what they're saying. If we go look at John Williams at ShadowStat, he's showing inflation at 17%. And of course, he tracks inflation using the same methodology that the BLS used in 1980. That's what John Williams tracks, and he's got us at 17%. Now, of course, the BLS has introduced, there's 6 main ways that they reduce the level of inflation that they claim we're experiencing, and a host of minor adjustments that they use, their methodology, to get inflation down to only 7%. I personally believe that the inflation for you and I, our cost of living, is well over 20% at this point, and in Europe it's probably about 35%. So if you think about 24% inflation, that's 2% per month. And so whether you want to think about it, our cost of living is going up at 2% per month, or the purchasing power of our dollars is going down by 2% per month. When inflation is at this level, we have to think about, or I would suggest, we need to think about not only where do we put our money, our investable money, but how does inflation, the loss of purchasing power, affect our investments? If the US dollar is losing 2% per month, when we talk about investments that are paying a 6% return or a 7% return, well, you're still losing money. You're losing, 15% per year. I personally don't want to lose money. I worked hard for my money. I want to hang on to it. And so anyway, this is a personal example. I'm currently in temporary housing, And so I didn't want to go out and purchase a washer and dryer. So I've been using a coin laundromat for the last few months. And for several months, the washer was costing me $2.50 and the dryer was 25 cents for 8 minutes. And then I went in, this was a couple of weeks ago, well, washer went up to $3 for one load of laundry. That's 20% inflation. And then the dryer it was a quarter for 8 minutes. They changed it. It's a quarter for 5 minutes now. Well, that's 37.5% inflation. And so, again, it's a trivial example, but it supports the idea that the real inflation, what you and I are experiencing on a daily basis, it's over 20%. And just something to think about as you're thinking about where do I invest my money, think about 2% per month loss of purchasing power. Now, this chart comes straight from the U.S. Fed. And so, it's one thing to listen to Brian, he doesn't know what he's talking about. Heck, I'm just a good old boy from Texas. What the heck do I know? Well, here it is straight from the horse's mouth. These are Federal Reserve charts. This is the purchasing power of the U.S. dollar. And so starting back here in January 1913, that's when the private corporation, the U.S. Federal Reserve, in case you're unaware, is a private corporation. It was day one and still is today. They like to pretend that they're part of the U.S. government. Of course, they work hand in hand with the U.S. government, but private corporation, been that way for 100 years now, 110 years. Anyway, when they were founded back in 1913, U.S. dollar was worth 100 pennies. If we look at it today, it's down, it's 3 pennies, something like that. That the purchasing power of the U.S. dollar has decreased by over 97% in the last 110 years. And so that's just a visual depiction of the idea, the loss of purchasing power over time. And so again, where to invest now? Physical precious metals, that's the place to be. Just park your money in physical precious metals and be done with it. Don't worry about paper assets and chasing yield and all that. If you do have to leave your money in paper, and I understand, if you've got money in a retirement account, your tax-advantaged savings for retirement, it's not easy to move that money, and it's expensive to move that money. Okay, I'm done, I'm going to cash out my retirement account. Well, IRS is going to hit you with a 10% penalty right off the top for early withdrawal. And then you're going to get taxed on that money as income. Because, if you take the money out of your retirement account, that's income. And so you'll not only pay the penalty, you're going to pay whatever your tax rate is on that money as income. And if it's a significant amount of money, it's going to push you up into a higher tax bracket where you will pay a greater percentage of that money in income taxes. And so anyway, if you have flexibility within your retirement accounts and are able to, if you've got the ability to move into treasuries with that money, you might consider variable rate treasuries. Interest rates are going to continue rising, as was just demonstrated. The Fed just raised another quarter of a point. After 5 banking collapses, we started with 3, there's been 2 more, so now we're up to 5 banking collapses in the last month. They still raised interest rates a quarter of a point. And they will continue to raise interest rates going into the future. If that's not, anyway, I'm just stating personal opinion, but, pop some popcorn and watch, interest rates will continue rising. Variable rate treasuries might not be a bad place to be as interest rates continue to rise. You can also move your money into your retirement money, your retirement accounts, into physical precious metals through a gold IRA. That's an alternative. That's not the best way to own physical precious metals, but it is an alternative, certainly a better place to be than paper assets, stocks and bonds with your retirement money. And then, of course, just stuffing your money under a mattress, and I'm somewhat kidding about that, but I want to emphasize now is not the time to be taking on risk. Now is the time to move to safety, protect your wealth, do everything you can to protect the money that you have worked hard to earn and save. If it makes sense for you to move into treasuries, be aware of Treasury Direct. You can go out here and purchase bonds, whether it's savings bonds. There's savings bonds at 6.89%. That's not a bad return considering what you can get on a CD at the bank. That's a pretty nice looking return. Except inflation is over 20%. And so, again, you go and you put your money in at 6.9%, you're still losing 14, 15% or more with your money sitting there because of inflation, the loss of purchasing power. These are the floating rate notes, FRN, mature in 2 years, quarterly interest payout, and then the interest being paid on these instruments will increase as interest rates continue to increase. All right, let's talk about crypto. I'm moving fast because I don't want to chat at you for an hour today. So crypto collapse, CBDCs. The U.S. Fed now launches in July. This is a paper that was just sent by the U.S. Federal Reserve to the White House, this economic report of the president, 500 pages. What's significant, one of the things that is significant in this report is that there are 40 pages where they are trashing cryptos. They're pointing out all of the bad things about crypto. And as I have been saying for months, they are going to regulate the existing crypto coins and tokens either out of existence entirely or into irrelevance. But all of the crypto coins and tokens are going to go away or are going to become essentially worth zero, which is their intrinsic value. One image in particular that's in this part of this report, it shows, I'm a visual thinker, as I've told you. This picture says it all for me. So these are the central banks. There's cash, central bank money. This is the CBDCs, and we have several central banks that intend to launch CBDCs in 2023. The first central bank's already trying it. It's not going well. The citizens are demonstrating that they're intelligent enough to stay away from CBDCs. They recognize this digital central bank money as the ultimate control mechanism, which that's exactly what it is. Stay away. Anything that is out here, that's the enemy. And if you're a trader, you may be aware trader in the financial markets. TRADER, not TRAITOR. Trader of economic vehicles. You may be aware of the saying, "Never fight the Fed," and so we can apply that saying here, never fight the Fed. Well, if you're out here invested in crypto coins and tokens, you're fighting the Fed because they are going to get rid of all of this stuff. And that's 40 pages of this report. They're telling the White House, hey, This is bad stuff. It needs to go away. And my belief, they are going to regulate it out of existence. Let's see, back to my charts. That's the document from the Fed to the White House. And notice at the same time, or essentially in the same time frame where this report has gone to the White House, we've got the SEC starting lawsuits against this Tron, which is one of the existing, that may be an exchange. I'm not sure. Coin token exchange. I don't bother to. They're all going away, so I don't really care about the details. They won't be here. Anyway, the SEC is claiming that these people have committed fraud and brought a lawsuit, specifically against the company founder and then two related companies, and then also some celebrities who were touting crypto. So. And then we've got a class action lawsuit that has recently started. Again, they're suing the people that were out on YouTube acting as cheerleaders of FTX. And of course, that's the collapsed crypto exchange that has declared bankruptcy. I'm going to show you another resource. It's David Dubine. You can also find him out on BitChute. And he's talking about how 3 of the 5 banks that have just collapsed, they served as on and off ramps for the little guy, the retail investor. They were outlets where I don't own any crypto, never have, never will, but people who did own crypto could go to these banks and exchange crypto for cash money, green Federal Reserve notes. 3, those banks have been closed. And as David Dubine points out in his video, what they are doing is shutting down the on and off ramps for the little guy. If the central banks have their way, digital money will stay around. Of course, it's going to be CBDCs. It's not going to be the existing stuff. But you and I won't have access to the infrastructure. That's the key. One of the key ideas that David is sharing is that they are shutting down the ways that you and I can access this new system of digital money. This image, this is the worldwide structure for processing digital money, digital transactions. This all exists today. And so if you hear people saying, the CBDCs, that technology, it's still years down the road. No, that's not accurate. It exists today. US Fed Now launches in July. ISO 20022, that's the International Standards Organization. They've been announcing this and this particular ISO rule, if that's the appropriate way to think of that. Well, when do you think the rollout of this particular ISO rule was? Well, March of 2023. Now, isn't that an interesting coincidence? In March of 2023, that's the rollout of ISO 20, however you want to say that, 20,022, this digital infrastructure. And in the same month, March of 2023, we've got 5 banks collapsing, crypto collapse, FTX, well, that was before March, but anyway. So again, a resource out on BitChute, David Dubine. This is a 2-part video series. You can find it on BitChute. It's under this title. He goes through great detail explaining this image and what it means for us. And so, I'm not going to, I'd be doing him a disservice. And I couldn't he spent 2 full days researching the information so that he could talk intelligently to this image. And so I'm not even going to pretend to understand this at the level that he does. But I suggest that you go out and listen to these videos. I'm on my second listening. I'm still trying to digest. He's packed a lot of information into these videos. I mean, look at that. There's a lot going on. And again, I want to emphasize this exists today, and U.S. Fed Now starts in July. So, just something to think about. Now let's jump into the charts. I actually want to start over here with gold. This is gold in the monthly time frame. We're looking just really nice here in March. Notice we've pushed up above these last 2 months, those candlesticks. We're pushing into 2000. Obviously, the $2,000 level. We've got a couple of levels of resistance. It's the lower median line of this shift pitchfork. That's one layer of resistance. It's the top of this trading range, this continuation pattern. This is a flag and pennant. And so we're pushing into the top of that pennant. This pink line, it's a duplicate of this pink line, and it shows us what the price target is for this flag and pennant pattern, and it's about 25.10. That's my current target. Medium range, my medium range is getting shorter and shorter. But anyway, I believe our next target before we get a significant pullback in gold is 25.10. When we get up here to the all-time high, we're going to run into some resistance, and that's 2080, somewhere in there, 2100. We'll probably get a pullback from that level and some sideways consolidation, maybe a 38% Fibonacci retracement before gold pushes on its next up leg towards 2500. In the weekly time frame, again, looking real nice. This was last week's price bar. That's a doji. And as I've explained before, the way I think of doji candlesticks, this is a battle. The buyers and sellers, they were in the arena duking it out last week in the gold markets. And of course, the sellers, in my opinion, are the nice government men who try to control and manipulate all of the financial markets, and certainly gold. Think about the current banking crisis, both here in America and in Europe. If gold breaks, or let me change, not if, when gold breaks through its all-time high, they're going to have an even harder time controlling the banking crisis. And so in my opinion, the nice government men are doing everything they can to pound the precious metals markets down. And so anyway, last week we've got the sellers and the buyers duking it out. The buyers won. Notice that the lower wick on this doji candlestick is longer than the upper wick. As much as the sellers tried to push gold down, the buyers came right back in and pushed it up, and they won. They pushed it higher than the sellers could push it down. Now we got a significant level of resistance at the $2,000 round number. And round numbers serve as support and resistance. It's just human nature, that people that trade the markets, they kind of gravitate towards round numbers, and 2000 is a big round number. From a MACD perspective, and I use MACD, one of the ways I use MACD is to measure potential levels of support and resistance. And so notice that the prior peak here, we've actually pushed above that. That's positive. That's an encouraging thing, which suggests that our next level of resistance from a MACD perspective is way up here. So gold has a long way to run before it runs into that next level of resistance from a MACD perspective. So, and obviously MACD is in bull mode, suggesting that the primary trend is to the upside in this time frame. So a lot of positive indications in gold. Here we are in the daily time frame. Again, we're pushing up into that round number at 2,000. The pink line is, that's kind of where the resistance starts from this prior high. Normally, I would draw this as a gray resistance zone, but in this case, I wanted to show the $2,000 level as a separate resistance level because it is significant. That's a significant resistance level. Again, we've got a ways to run, a little ways to run before we push into this resistance level from MACD, but then we go back to the previous high, and we've got a little bit further to run before we hit MACD resistance. And so, and I believe that we're going to push through the 2,000 level probably this coming week when they decide how to bail out Deutsche Bank and Credit Suisse. Credit Suisse has not resolved yet. That's still up in the air, and now questions are being asked about Deutsche Bank. So this push through 2,000 may occur as early as next week with the next round of banking bailout, which could address Deutsche Bank. Silver's not as exciting as gold in the monthly time frame, just kind of bumping sideways this month. Weekly time frame is more interesting. Last week, silver pushed up through the top of this support resistance zone, pushed up above the 10-week moving average and above the median line of this shift pitchfork. So silver pushed through several layers of resistance last week. This is not a flag pattern, continuation pattern, but Timothy Morge would point out, and he's one of I feel honored to count him as one of my mentors in financial matters. He would point out this pattern, that basically it's a doubling of this range. We got a nice strong pullback, and now silver is on its way to replicate this movement, which gives us a target up here at, 26 and change at the top there. So, and notice that we're about to get most likely about to get a new MACD buy signal, and that MACD is in bull mode, suggesting that primary trend is upwards at this point. Silver in the daily time frame pushed up into this new trading range. We can see that back here, this trading range went on for several months. Well, silver pushed up into that range and then pulled back. And you might look at that candle, and some people would talk about that being a topping candle, star. Evening star as a topping candle, long upper wick, small body, doji candle. I don't believe that's the case. I don't think that silver topped last week. I think as gold pushes higher, silver will continue pushing higher. MACD's got a long ways to run and has just moved up into bull mode. So positive indications in the daily time frame. Mining stocks, monthly time frame, still pushing into this resistance. With everything that's going on in the financial markets, it's not surprising that the mining stocks have not taken off. People don't know what to do right now. There's so much going on, and so it may be a while before this up leg in the mining stocks really gets going, but I believe it will. Let's drop down to the weekly time frame, and we can see, this is price has pushed up through the 10-week moving average. We've got a bullish hammer, Japanese candlesticks. We could call that a bullish hammer candle. MACD in bull mode. Looks like we're about to get a new buy signal in the weekly time frame, and energy is elevated, which of course, and I just speaking of energy elevated, I visited one of the local coin shops on Friday, and he's had his last 2 weeks have been very busy. Had one customer buy 140 ounces of gold coins. Fortunately he had ordered a large lot of silver, and so he had a good quantity of silver on hand for the last 2 weeks. And he said, the people have been coming through his doors in a steady stream, buying physical precious metals. But as retail buyers move into physical metals, that suggests that we'll also have retail investors moving into the mining stocks. And so anyway, I fully expect the upleg in mining stocks to continue and most likely accelerate. US dollar daily or monthly time frame just kind of bumping sideways right now. Weekly time frame, big sell-off, push up into resistance, and a pullback. Has dropped into bear mode. Primary trend is down based on MACD. Who knows? There's so much going on. All the markets are manipulated. And which bad apple do you like? Does the bad apple of the US dollar taste better than the bad apple of the euro, or the yen? Who knows if you're a currency investor? Of course, as Americans, we're kind of forced we invest in the US dollar whether we want to or not. US dollar in the daily time frame, pushing up into resistance. That's the 50-day moving average, and of course a support resistance zone. Lower median line of this, that's a shift pitchfork. Yes, that's a shift pitchfork resistance there. MACD in bear mode, energy very low. So dollar's not looking good in the short term. And of course, a strong dollar, when the dollar is strong, that's one of the headwinds for the precious metals. So weakness in the dollar helps the precious metals move higher, and lower interest rates also help the precious metals move higher. And of course, there have been so many investors moving into treasuries, U.S. Treasury debt, that interest rates have dropped fairly substantially. And we can see that here in this one of my favorite charts. Big pullback in the yield on 1-year Treasury bill. Same thing in the 10-year, the notes, big pullback. Sitting right now underneath resistance at the 40-week moving average and sitting in the middle of this support resistance zone. Notice that that's a doji candlestick with a long upper wick, suggesting, movement to the downside. MACD on a sell signal, but still in bull mode. Energy is low. Yield on the 30. Still in an uptrend. I mean, that would be the key idea I would say for this chart, and for all of the debt instruments. The underlying trend is for higher interest rates, and so anybody that's saying that interest rates have peaked, they're talking their book. They either don't know what's going on, or they're talking their book. In my opinion, interest rates will continue heading higher. They have to. I'm about to say that nobody is buying treasuries. Nobody's buying U.S. debt instruments or any sovereign debt instruments other than central banks. And in recent weeks, people are moving into treasuries, in particular like the 2-year Treasury notes, because they can get a yield there. You can get 4% return on a 2-year Treasury, beats the heck out of what you can get at your local bank in a CD. And so anyway, interest rates have pulled back, but in my opinion, the underlying trend is for higher rates. 30-year fixed rate mortgage going to cost you about 6.9% right now if you've got good credit. Obviously, that impacts the real estate markets. Bitcoin, crypto, obviously with the banking crisis, people have been moving into Bitcoin. I assume that we'd see the same thing if we looked at some of the other crypto charts. And this chart flies in the face of everything I said before about crypto going away. But this chart doesn't change my opinion. Crypto's going away. Bitcoin ain't going to be here. Or if it is here, it's going to be irrelevant because it's not part of CBDCs. It has no role in the infrastructure of settling digital money and transactions in this new infrastructure. So Bitcoin's not a part of that. You and I don't have access to the infrastructure of that system, the international settling of digital money and transactions. We don't have access to it. And of course, that's intentional. They don't want retail investors involved because we might make money. Let's see. So equity markets, and again, all of the markets are manipulated and managed. And so, I don't put too much stock in stocks. Don't have any money in stocks other than mining stocks and mostly junior mining stocks, which is more of a speculation than an investment. But anyway, this is in the daily time frame. So, we've popped up above resistance at the 200-day moving average. On Friday, we found support there and closed above that level. MACD is in bear mode, suggesting that the primary trend is to the downside. Energy is elevated. Let me point out that the trend, another way of looking at trend, is we've got a high and a low, lower high, lower low, lower high. That's the definition of a downtrend, folks. And so if you're trying to decide, okay, what's the trend right now? Well, it's down. High, low, lower high, lower low, lower high. That's a downtrend. Official definition of a downtrend. Same thing here. Low, lower high, lower low, lower high. And the assumption would be this will roll over and move to the next lower low. MACD's in bear mode, suggesting again that the trend is to the downside. I'll keep rolling here. Of the three equity indexes, NASDAQ definitely looking the best. And we can see that, NASDAQ's actually up here challenging this previous high. That's not a straight line or a horizontal line, so it's close. One of the challenges of being OCD is that, oh, it is a straight line. Okay, never mind. Yeah, you're either OCD all the way or you're not OCD at all. There is no half measures when it comes to OCD. And so anyway, that had to be a straight line before we moved on. Brent crude, this is my, most people look at WTI, Western crude. I prefer Brent crude. It charts better, in my opinion. The Biden administration is still releasing oil from the Strategic Petroleum Reserve, SPR. They've been doing so for a full year. And, my understanding growing up was that the SPR, that was for us good Americans, if we had challenging times economically, if there were games going on in the Middle East, for whatever reason we couldn't get oil out of the Middle East, that's when we would tap the SPR. Well, what's been happening for the last year is the Biden administration has been selling oil from the SPR, and any number of reasons to help win the midterm elections, make money One of the companies that's exporting oil from the SPR just happens to be Hunter Biden is one of the major investors in that company. And so, that's one of the subplots of draining the SPR is that it personally beneficial to the Biden family. Anyway, so much going on right now, folks, economically, just too much to keep track of. Which is why I showed you that chart of Exeter's pyramid. That takes me back to, that's all we need to understand right now, economically, financially, is that the lower we are on Exeter's pyramid, the better off we are. I'm not going to waste your time pulling it back up. Look, I'm done in less than an hour, 55 minutes. I'm going to call it a wrap. I look forward to talking to you in the next video, folks. Have a fantastic rest of the day and the week going forward. See ya.